Okay. If you can go ahead and place, I got it for, this is the weekly top-down analysis for December 11th. This is the December 11th to the week of December 16th. Now we got 3 more weeks till the end of the year. And it's important to note that during this time of the year is when we're going to see low volatility as we get transitioned into the new 2023 year. So the way that will work is that this is basically going to be your last week to really get some good trades in, maybe close out some trades for the end of the year, or get into some position to taking advantage of some good moves that's going to be coming on this week due to some expected volatility, fundamental news that's going to move the market. And then the last 2 weeks of the year is going to be more of a low volatility, not to say there's not going to be any trade setups, but this is where I would recommend and suggest to not get into any new trades other than the trades that you get in this week. So if you get in this week and you're looking to maybe get a good 50 or 100 pip moves or whatever trade that you're already in now, those are the times that you may want to just continue to watch the market. You can still hold your trades over to the new year. It doesn't matter. It's just, it's not going to be much more expensive than what it already is in terms of the regular swap fees. But just keep in mind that you may be in the trades just a little bit longer. The volatility may be a little bit longer. The ranges may be a little bit longer. And you may not see that much movement each day if you're expecting to see a good 50 pip or 80 pip or a great ADR movement of the pairs after this week. Okay, this would probably be the last week in terms of high volume volatility movement that will set the tone for the rest of the month. And then what we plan to do now is we're doing a top-down analysis now. I'm going to do one more top-down analysis this next Sunday to talk about this previous week and what we probably would be seeing for the next 2 weeks. So it'd be kind of like a 2 weeks market analysis. And then I'm not going to resume until, to be honest with you, I probably won't be, I probably do like a January 2nd, a January 2nd special. And I'll probably do it around this time. Some of you guys may be resume back to work or whatever that case may be, but Monday, I'll probably do it around this time, do like a special New Year 2023 top-down analysis, kind of give us a 2 weeks break. Sunday is New Year's Day, January 1st. So Monday, January 2nd would be a good time to do it. So that's how I'm going to do it from a week top-down analysis. So today, we'll do one more this coming Sunday, Sunday on the 18th. And then we're not going to come back again for January 2nd. In terms of live trade room, this will be the last week of the live trade room. So we're going to hit it hard Tuesday. We're going to hit it hard Wednesday. We're going to hit it hard on Thursday. And we're going to try to do whatever we can to have some good pips and manage our trades and put ourselves in a good position. And that would be it for the last 2 weeks of the year. And then we'll resume our live trade room second session on Tuesday, January 3rd. Okay. You will be on a plane to Sydney because for 2 weeks. Okay. Awesome. Okay. So what do we have for the week? So let's start with this week, starting today, nothing, Sunday, right? So there's going to be some very, very important news. You're going to want to make a note of this starting on Monday. So on Monday, London sessions, you're going to have GDP month on month. It's going to be an impact on pound doing London session coming tomorrow morning. And that's going to start to move the pair. It may not be a big move, but it's going to be some move. And then you're going to have, around the afternoon, which is basically nothing's going to be exactly happening at that particular time. The Bank of Canada Governor McMahon, the Bank of Canada Governor is going to be saying something, but I don't expect anything, even though it's a red folder. And that'll be it for Monday, okay? So some movement on London session, nothing on USD, nothing on indices that I'm expecting a big move on, okay? Tuesday, starting London session, things start to get a little bit even heated up. So we'll have pound news, claimant count change that might move the pair, both pound and euro, going into London session. And then you can expect to wake up to see something around the Bank of England governor speaking. There'll be something here. We'll be here live on Tuesday. We're looking at this, but we have a big news that is going to be happening, and this is significantly going to move the US dollar, gold, Bitcoin, and also and all the US dollar related crosses, including indices as well. And that's going to happen right at 8:30. So expect some volatility movement there. I would expect that if the market, which is the dollar, and we'll see it, the dollar is already low, we can probably start to see maybe a dip or maybe a pop, okay? In this particular case, I'm expecting the CPI to stay the same or a little bit higher. So I am going to expect a little bit of a pop, okay? And then it'll start to drift, maybe drift down. And then for Wednesday news, which is the FOMC, and you're going to see it in a minute for the pop, for the strength in the dollar. Okay, that's my kind of what I'm seeing when we look in the chart. Okay, so at 8:30 CPI, expect some significant move on this particular time. So make a note on that. 8:30 a.m. Eastern time. We'll be live in the trade room. You're going to want to see this and catch this move. Okay. And then you got the Reserve Bank of Australia, who's going to talk about 5:30, which is doing the rollover. So I don't expect a lot of movement on there. There will be some movements going into Asian session. So expect that with Australia and Japan, just expect some movement. And then during London session on Tuesday going into Wednesday, expect another movement on pound, right? So this is going to be like a pound week, US dollar week. It's going to be some really good, strong movement on European pairs and also dollar. Okay. So on Wednesday, this is going to be really, really big. On Wednesday, couple of things. Number one, we got the FOMC movement that is going to be huge. And that is going to be on Wednesday at 2 o'clock. Here's what we'll do. We'll do a special live. We'll come on about 1:45 and we'll trade that dollar news, or we'll watch for that dollar news and expect to see what will happen, right? So we'll do a special like around 1:45, or we'll get on about 1:45 to about 2:15 to see the last FOMC rate decision and see how that's going to impact a lot of our dollar crosses and other pairs that normally that we're trading, including gold, okay? And that would be Wednesday. Of course, you're going to expect to see something around oil because that's crude oil inventory around 10:30 that morning. But around that morning, we're not going to really see a lot of movements on the dollar, right? This is going to be like the hours before the dollar, and you can expect to see some ranging, and we'll talk about that setup on Wednesday. And then we'll end the session probably real short around 8:30, and then we'll come in around 1:45. And we'll trade this 1:45 p.m. Eastern time. Okay, all the times that I'm talking about is Eastern time. Okay, and then you're going to see around 4:45. You're going to have GDP on New Zealand. I would expect to be lower, and therefore it's going to be weak in New Zealand dollar. I'm expecting New Zealand dollar weaker this week. AUD is going to be somewhat stronger, coming off a really good end of the week strength. Australia had just had a recent bank rate interest rate. So I'm expecting to see AUD to be slightly stronger than NCD, but overall weak against the other pairs. We'll talk about that. Okay, so that would be Wednesday. Okay, so if you make a note of that. Thursday, this is going to be like a triple header. Here's what I'm talking about. We have Swiss Bank, 3:30 a.m. This is going to move the market. It is going to move Swiss franc pair like no tomorrow, okay? I'm expecting some heavy strength to come in for Swiss francs. Swiss francs has been in negative interest rate for the last 2 to 3 years. They raised interest rate last time and it went through the roof. Swiss francs was crazy, right? And it finally got out of the negative, right? So they're looking to raise interest rate 50 basis point to be at 1%. And oh my God, I don't know how long it's been at this rate. They haven't had this rate. Oh, holy smack, right? See, look at the whole, since 2019, they've been negative 0.75, negative 0.75 the whole freaking time. And then they finally raised it on June 16 to 0.25 negative. And then it went from 0.25 in September to, they did a 0.5 basis point to get it finally out of negative. Look how long it was in the negative, right? That's how weak Swiss francs was located. It was just weak. It's just really, really weak. There's been some strength in Swiss francs against the JPY pairs, but for the most part, it's been a weak currency, right? And Swiss francs is a safe haven currency. So it's just been some strength, but that's because it's been related to geopolitical news. But other than that, it's an overall weak currency compared to the other currency due to the negative interest rate. While a lot of the interest rates been low, but specifically Swiss francs had been in a negative, and it finally in the positive at 0.5. So they're expecting another, instead of a 25 basis point, they're expecting a 50 basis points, which I don't know what the probability of that happening, but I know there's going to be an increase. I would agree with that. They may come in at 50, may come in at just another 25 basis points, but either way, there's going to be an interest rate increase, which should strengthen the Swiss francs currency. Now, keep in mind, we are going to look at the chart to see why would that even make sense correlated to the technical analysis. Why would a Swiss franc strength come in at this particular time, right? In other words, why would the market makers, or what would the market makers do using this news on Thursday, which Swiss francs related to the Swiss francs crosses or the Swiss francs pairs, SHEF, JPY, USD SHEF, things like that. Why would that make it sense? And we can probably get a little bit of perspective today, even though there might be some little bit of movement on Thursday, specifically in USD Swiss franc. That's going to be significantly changed on Wednesday. Whatever we're seeing today is going to be significantly blown out of the water on Wednesday, but on Thursday it may turn back. You know what I mean? So Swiss francs will definitely look like to pick up some strength, and we'll see if it looks like it's going to should be picking up strength, or it should be looking at weakness. And we need to look at the chart technically, and we can tell without looking at the news what we think the market makers are going to be using the news to covert the move on the Swiss francs currency crosses. Okay. The next decision we're going to be having after 3:30 will be this one right here, 7 a.m. Okay, so when we come on Thursday morning, when we come on at 7 o'clock, plan to log in around 6:45 if you can, because that's when I'm going to be on earlier, right? I'm just going to be looking at the impact from the Swiss francs crosses, because we're in Swiss francs JPY pairs, and maybe some odd Swiss francs, and maybe some ED and CDE Swiss francs pairs. But I'm going to be looking and see what the impact is on Swiss francs, but also getting ready to see what the impact is going to be on pound, as we are seeing some development, and we will see more development on Wednesday on what we're getting ready to see on Thursday. Okay, so then that be hit number one, hit number two. So that's going to be really, really huge around 7 o'clock. And then we have our triple header right here. Geez. Euro will also make their interest rate. Okay. So they're expecting a 50 basis point increase. Pound is expecting a 50-point increase on their currency, and you can probably expect to see strength on those particular currency, maybe, right? And I say maybe because even though there are increases, the fundamental piece of it may be some dovish comments around that. So again, it's fundamental news, And what you would expect to see some strength on there may not always happen, right? In the way we like it, according to what we should see when it comes to fundamental news. Same goes the case for Swiss francs. Just because I'm expecting strength, I'm really talking about strength because of what I've seen already in the technical analysis on the technical charts. We would take a look on pound and euro. Now, what we may see right now may dramatically change on Wednesday when the FOMC make their rate decision and basically shift the charts technically. And then that may or may set the course for maybe a possible reaction on Thursday, right? Or maybe a continuation. And I hate to say there's going to be, well, it's because of Dover's comments or because the price was baked in and blah, blah, blah. All that fundamental mumbo jumbo doesn't mean really anything. It's all come down to technical. I just know on this particular day, we're going to see some manipulation or some movements and reaction on this particular currency at this time, okay? And that's all that matters. What we need to do is really see what the chart is at from day to day to see what we expect to see the chart to be able to do technically based on key levels, order block, fair value gaps, and the reactions in the market makers, and according to the market makers cycles and levels, okay? All of what I just said seems very, very complicated. If you have not been following, if you have not been through all the training, if you have not watched that, or if you have not been experienced traders for many, many years, okay, so it might probably went right over your head. But regardless, if you plug in and you come to the live trade room, if you watch all the videos and you understand it clear as water, you're going to be really, really excited about what I'm just saying and what we're anticipating, okay? So that's going to be the triple hitter, right? And then we're going to have the another high volatile news. However, whatever we see on Tuesday, CPI, Wednesday, FOMC, expect Thursday to be nothing more than just maybe a continuation of that particular move, right? Core retail sales, and probably makes that mean the manufacturing retail sales month to month. Really, it's a key news, but during the week of the FOMC, because we have this type of news, CPI, PPI, and core retail sales every single month, right? But the FOMC rate news is every other month, right? So when that happens every other month and we have it during the same week of the core retail news, expect core retail to be insignificant. If it's by itself and we don't have a FOMC, then it might be a significant move. So I don't really expect anything other than just maybe a couple fake out moves. But other than that, that's going to be a heavy hitter on Wednesday and Thursday. Can you guys see it's going to be a very high volatile, crazy moving week on a lot of our currency pairs. So you're definitely going to want to stay tuned to that one, okay? And that would be Thursday. And then we're going to write out Friday with, maybe some more continuation of euro and pound during Friday, London sessions. Expect some movements there. And then again, 4:30 euro and then pound. And then that's it. Whatever happens on Tuesday, Wednesday, and Thursday with the dollar, we can expect to see that to be a continuation on Friday. And then maybe a slight pullback to top traders on Friday for the remainder of the year. That is a lot, okay? Hope you guys got all that. Let's take a look at the charts. We'll go right into the technicals, okay? Okay, so you should be seeing my charts. This is the dollar I just pulled up. And this is awesome, thank you. So this is the high of 2016. This was the high of 2020. We broke that level and we went to this particular high near the high of 2002, right? We didn't quite get that high. There was a very low probability, but we had that up there just in case, right? That would have been a 121 high. That would have been crazy if it would have went that high. I would have been like, wow, that was insane. That was an insane push to the upside, and right. So here we had a couple pullback, some nice pullback. Here we didn't get that many pullback compared to this particular move, right? And we probably took off from that same location. Well, this actually came from this location. And this was a big move. Imagine that one. Some good pullbacks though. So these are good pullback. Even if you were selling, you got out of it, right? And then you could have reset, or if you were looking to sell, you got out of this. And then you would have been probably looking from here to here and kind of reset. But then if you would have got into some sales up here, the pullback would have been enough to get you out or cost average out, okay? Versus here, you can see there was only a small pullback, and that these two small pullbacks may have not been enough to get you out cost average of the trade if you were trying to catch a sell and it went against you and so forth, right? But the point is, we are now breaking the structure, right? And we got a change of character, and we're looking kind of weak into a downtrend. Let me go down to the daily, okay? And I put this fib from the swing low to the swing high to show the separation from the premium and discount location. Premium is what we're looking to sell, discount is where we're looking to buy, right? And I got my arrows here, but it has not quite went down there. So let me go ahead and reset this. Right now, as I zoom in, prices came down to this particular, let me go ahead and just delete this so I won't confuse you guys. And zoom in. We have this order block right here, and the dollar has came all the way to this particular order block. Now, the next order block after this, when you're going from order flow to order flow, is down here. The likelihood of price coming down here, to me, in my opinion, technically, it's very low due to the fact that we have several imbalances in the structure. We got one here, we got one here. For the dollar to get down, we're talking about it has to be weak, right? So that means even when the Fed increased the interest rate, how do we know it's going to increase interest rate? You know, what's the likelihood of increasing interest rate? Well, let's look at here, right? And I showed this in the live trade room. Is the Fed's going to raise interest rate? Well, there's a 78% high probability based on the Chicago Mercantile Exchange and a lot of the market influence are really expecting the Feds to increase interest rate by 50 basis points. There's a very low likelihood of a 21% probability that they're thinking that the Fed could come in higher, even though they've stated or alluded to that they could be keeping interest rate pretty high and continue upon that path because the interest rate, the inflation has been pretty high. But right now, it looks like it's around 50 basis points. Now, if they come in at 50 basis points, that should cause a strength into the currency. Any interest rate increase in the currency is all positive. But it's the Dover's comment that come in afterward that says, well, this is the last you're going to see of the interest rate, or we're looking to lower interest rate. Well, even if they announce a positive interest rate and they come in and say, okay, this is the last you're going to see it, then that's a Dover's comment. And that strength could be short-lived, right? Now, if they come in at 75 basis points and the market was expecting a 50 basis point, well, that's going to be a very strong strength and a shock to the market because everyone was expecting only a 50 basis point. So that's why I'm saying there's a very high likelihood they're going to come in strong. So with that being said, I'm expecting strong strength in the currency. Now, I don't expect a short in this particular currency, especially where it's located in the market, right? On this chart, it's located at a very low. It's at a very equal low to this particular location on August 22nd, and it's at a very key order block at this key order block level, right? Now, the next order block level is down here, and it is a possibility to come down there, but I doubt if it would do that now, right? It's already been making its weakness move here. So I do expect some pullback or some manipulations to the upside before it moves down. Okay, so I'm going to head and take that. And I do expect maybe a look to the downside, to this level, to kind of get traders induced to think it's going to go short. But when the market is pretty much exhausted and it's creating some divergence down here, I'm expecting the market to come down and come up and give it some strength and come up to about 109. That would be strong. Now, I can see this as a very high probability. Medium to low probability, I can see it come this high. But to me, either way, with the strength, and we'll look at the other pairs, I'm expecting this, right? This is what I'm anticipating. I would look for confirmation of a break of the previous daily high of 105.43 before I even consider, yep, we're going long on, we're long with the strength on dollar, therefore short USD, short pound USD, NCD, odd USD, and go long on USD CAD, go long on USD SHEF, right? I need to see that before I consider that, hey, we're going, right? So in other words, don't go into your charts, and I'm not telling anyone this is for educational purposes by all means. I'm not saying to go in there and put full standards and start jumping into trades right now. We have to wait for confluence. We have to wait for that news. You put that trade in now, you may go into a little bit of drawdown and then come to find out the news actually dropped here, right? Before it goes back up. In other words, it'll start to look like this. And then you're like, oh, right? And then it actually does come up before it comes back down. Okay, so it's at a very key location at the low, at a key order block, market exhausted. Technically, to me, I would not short the low, obviously, and I would expect a pullback. Okay, this is on the US dollar. Okay, let's go to the gold. Let's go to S&P 500 real quick. Okay, S&P 500. This is inverse correlated to the dollar. Now look where the markets have gone. This is on the daily. We already had a very big correction from the market from the top at the beginning of the, not beginning of the year, towards, I want to say, yeah, at the beginning of the year, I'm sorry. So we already had a big 28% market correction all the way down to October 22nd, right? And it was at this key order block right here. This was why I said it was a medium probability, and it almost damn near came close. Now, since then, we've been on a little bit of a rally. And then the market, S&P 500, which is the stock market, basically came close to this previous high structure, this previous swing high structure of 4155 on the S&P 500. Came pretty damn close. Had a hard time breaking that structure. Came about 40,000, not 4,000, and didn't come up to 4,100. And then the market started to get weak, right? Well, this is weak, and the dollar is weak. That's not supposed to happen. When you see something like this, that means something peculiar is going on, right? We got a huge imbalance here, so I kind of like that. But when you're seeing the market go weak and the dollar go weak as well, telling me something is brewing up and the market makers are getting ready to do something, okay? Now, if it had a hard time breaking this high and it's already making its way down, it's just an indication that the market makers are getting ready to come up. If the market makers getting ready to come up, do a equal high tomorrow, Tuesday, and then Wednesday. Could that happen? It's possible. But this is going to be a key point for me to say that the market are going to go up. We need to see the break of that 4,000. In other words, I need to see it go up. I need to see it stay above that 4,000 range. And then on Wednesday, that could happen. That could happen. But for this to happen, that means the dollar would have to be weak because this is inverse correlated to the US dollar. Okay. Now, if the market stays in this range, and it comes about right here, or it comes about right there, either way, on Wednesday, right? Because CPI could set you up as a trick, thinking it's going to go long and the dollar just continue to go weaker, right? It could set you up. And then FOMC news come up, strengthen the dollar, and therefore weaken S&P 500. That could be a setup and that could be a trap, okay? So that's why I would say stay kind of out of it and watching this market and not take any great decisions right now, unless we want to see the break of this 39.75. This is that low, 39.75, and when you see the break of that 4,000, okay, on S&P 500, that's the high, 4,099, and then the low is 3,975. That's the high, and we're in this range, okay. The FOMC news, CPI news first. CPI news is either going to take it to the top of this range, or it's going to take it to the lower of this range here. This is a structure that we want to keep paying attention because we got a big imbalance right there, right? This market, the CPI news could push it to the top, it could push it to the bottom, not sure. But the FOMC will break the structure, okay? It'll break the structure to the high, it could break the structure to the low. If the market is around here just before FOMC, we would take a look and we will watch this. If the market's around here, around FOMC, there's a high likelihood we're going to see the break of that. But just because the market's up here doesn't mean that the market can come back down here as well. But I'm just saying this is a higher probability versus this, right? This is when it's tapping, and then it finally breaks, okay? From a market structure standpoint, there is a higher probability that this market is going to be more bearish, right? So I can see where the market may want to come down to this particular structure here, which is near the previous weekly low of 3,969, or it can even come as low as 3,634, right? And that's what I'm saying. My bias with the market already looking weak. I'm more short bias, more bearish, and believe that the market is going to come down to this particular zone before we go back up. Okay, so this would be the remainder of the year, and I would have to see what happens there. And I would hope to see that after we make some strength, then the dollar weakness comes in after the first of the year or towards the end of the year, and therefore the market will be in this range for quite a few more times. Okay, very, very tricky, but the market is kind of structuring with the higher highs. Market pretty much over exhausted. We got an imbalance here. It looked like it has an opportunity to come back to this particular order block. So I'm expecting a dollar strength, therefore an S&P 500 weakness. Going to the gold, same thing. However, with this one, it's really reacting appropriately to the dollar. In other words, inverse correlated. So when the dollar is weak, gold is strong, which we're seeing, boom. And then when the dollar is strong, we should start to see a gold weakness. Now, what's funny is that we're here and we're having a hard time breaking the structure of 1804, okay? Now, this structure up here was a possibility, but I didn't see it break, okay? It never broke that. It came here 1, 2, 3, and we're almost approaching that right now for the 4th time, and still having a hard time breaking this 1804 structure. So with the dollar strength expected, this structure seems to continue to hold true in my idea. So I'm thinking, and I'm expecting gold weakness. There's an imbalance here. There's a market structure right here that I would like to see gold drop of the previous low of 1739 and then come down to around 1675. come all the way down here and get this imbalance. And either way, I am not looking to buy up here, not in a premium zone. I want to see it break below this 50%, get into the 618 or anywhere in this green, and then let's get ready to play some buys. Hell, it might even come down as low as here. It may even come down all the way down here to give us a triple bottom. Very low likelihood, but this is very highly likely. Okay, so with the expected dollar strength coming in this week, I like to see gold come down. So I am bearish to short gold. Okay. All right, let's jump over to Bitcoin real quick. All right, Bitcoin market is still in the low range. This was the top range that we were seeing up here. And then we had that FTX situation that kind of dropped gold just because it's sentimentally impacting the crypto market. And then we're seeing Bitcoin kind of staying in between this low of 15.4 and not getting above 17.2, right? So we may continue to see this range for the rest of the week, right? We may see it come down here and then up here, right? So that means with the dollar strength, that means that might push, Bitcoin back to around this low range a little bit more and just stay in this range just a few more weeks, right? And then we'll be making this move. Once we break this structure, right? Bitcoin needs to break 17.294. Once it breaks that structure, this is a key structure of a choke for the Bitcoin to make it way back up to this range. And then we have another choke up here of 21, market structure of 21.297. Right? It's still in this range, but it's around 17, which is great from the low 15.475. But I don't think it's going to, not yet ready to break due to the fact that we are expecting some dollar strength come in. That's what I'm expecting. Looking, it's at the top of the market here. I don't want to buy the top of this unless I see a break, and then I'll catch the pullback. But other than that, I think it's going to come back down. So I am bearish on Bitcoin to come back down to the 1600 range again, right? So unfortunately, it doesn't look like it's ready. It did a little bit of push up, which is great, but I think we're going to stay in that range for the simple fact of the dollar swing. And this is such correlated to the stock market, S&P, NASDAQ. Therefore, with the NASDAQ expected weakness, we can expect to see Bitcoin to be in this range for the remainder of the year. Okay. All right, let's go hit oil real quick, and then we'll get right into the pairs. Oil did exactly what I would expect if I saw this break of $7, and look, just continue to drop all the way down. Just was this when we called it last week, it was here. And I said, listen, if it doesn't break this, look like it's going to come down. It's going to come down all the way down to this particular order block. And it did. And we're there. Okay. So what can we expect now? Well, now that we have this order block, there's a couple of things that we could see. We could see a little bit more to the downside or anywhere in this range, right? However, that is about as low as I'm going to see it, right? So over here, to me, this is my buy zone. I'm bullish on oil. So I would expect to see some oil strength to come in and come up back to the 75.66 high. And then I like to see it break and come back up here to around 83 to stay within this range. Okay. Like we're going to be in a range for a little bit, but in my opinion, based on what I'm seeing, obviously I would not want to short this. Where is that right now? It's in the low. There is a few more areas that, oil could continue to drop. Not to say it won't, but with the expected market already exhausted, it's been really, really down. CAD had a really good strength coming in with the interest rate increase for CAD. So I'm expecting a little bit of some push to the upside, right? Back to the 77 range. So that's what I'm expecting. Now, obviously, we would need to go down to the lower time frame, and we can probably see that it's still looking to not push up yet. Go down to the 1 hour. We need to see a little bit of upside, and we need to get down to a lower time frame to see if this is starting to provide us a W pattern. And right now it's starting to range a little bit, which is a good sign. But as long as it doesn't violate this low and it starts to make its way up on a lower time frame, and it breaks that structure and maybe come back down, and it still doesn't break that structure, then this is going to look like it's going to be moving up. Okay, so I'm more long. I'm bullish on oil than I am bearish at this point, but not to say that it could come down a little bit more. But in this area, I would want to do nothing else but look like, you know, to be bullish in this area, right? You would want to buy low, not sell low. You want to buy it low, and it's already in this order block. So this is definitely in the buy zone, because the next structure is this right down here. I don't see oil coming down to $43. Not today, guys. You know, it'd be nice, right? And then oil would be back down to the $3 for premium in the States, but I don't think it's going to come down that low. Right? I expect some CAD strength to come in and continue to pick up strength for the remainder of the week. And then I like to see, again, be aware that this is a range. The low range target is 61. However, I don't see it going down that low. We would need to watch this, and we can take a look at this on Tuesday, but don't do anything for Sunday and Monday. Tuesday, and we'll wait and see how the development is. And if it looked like it's starting to fail to break this low, I would say of 71.35, it's coming back up to 77. Okay. That's oil. Now let's get into our crosses. Let's start with Euro USD. Okay, so Euro USD has been making this nice bull run move. It's nice. That's great. We made it all the way back up to the 105. That's a nice move. Now, obviously, my target, I would love to see it come back up to 115. Well, obviously, it's got to get to 111. And then get to the structure over here about 114. However, I don't think that's going to make that move right away, especially when the market is already at the peak and it's already been having a hard time breaking this high, right? So we came up to 105 at the previous weekly high, and then we had a 105.4, and then we had a 105.6. Okay, so 105.4 and 105.6, it's basically having a hard time breaking that structure, right? So we're right up at that, up against this structure here, which is the 106 price. And we may come up this, right? We may come up here. Now, as you can see, I have 107 as a medium probability, right? Let me go ahead and make this. High probability target, which is 106.275, 106.275 on this 106.211, sorry, 106.211 is what I'm expecting to see if this market is going to go up. Now, for this to go up another 176 pips, we need to see some killer strength come in euro and some significant weakness. I say a combination of both in the dollar to see that go up to 176. Now, we got CPI news coming up. This may cause us to do a little bit of it's going up, right, type of deal, right? Monday's trap day, Tuesday, right? And then Wednesday, FOMC, boom, trap day reversal. Well, not trap day, but reversal. And this drop, in my opinion, I do not want to buy when I'm in the premium. This is all premium. If you wanted to buy, we should have bought down here, right? If we're up here, well, you want to sell. I don't care if it goes up here, I'll sell it again, right? So I wouldn't do anything right now. I'd be looking to sell. I would looking for some movements, for some weakness in your USD. Come right here, break this particular structure right here, which is 102.904. 102.94 would give you a very good indication we going down. But I don't know if you want to wait to that, right? You don't have to wait to that previous weekly low. The next previous daily low is 104, right? You can wait for that one and wait for the break of 1.04896 and say, listen, if it breaks this and we're seeing a nice M pattern, which we'll take a look on Tuesday, and this having a hard time breaking this structure of 106, if it doesn't break this, and it's going to be targeting this, we got a couple of imbalances here that's nearby. And it's already exhausted. I mean, how much more do you want this market to keep going? It's already been making its move for, since November 22nd. And it has already been moved up 889 pips without any very serious pullback, right? There's been some minor pullbacks, of course, but we don't have a nice correction. I like to see this thing come down at least in my 50% range, and there's an imbalance here. I got a gap, got a fair value gap right here, and I like to see it come down to the structure of 99 or parity, right? So your USD parity, we may revisit that again, and that's going to be like so anything can happen on here, but I'm just looking at from an analysis standpoint. We could see a sharp drop from, CPI. And if we see that break of structure of 104 on CPI, oh my gosh, you can only imagine what the FOMC rate decision could do, right? It could spike down. And then what we have on Thursday, we got Euro rate news, right? So Euro rate news could easily fade this move back up. And that could be an interesting combination, right? Or the Euro can say, hey, we raised interest rate, but we're seeing this, we're seeing that. The economy's in a really dire state, and there's just more Dover's comment. And you're seeing this pair start to drop more and more and more, or it may see a sharp drop, or you may see a sharp pop and then a drop because Euro, even though they raised interest rate, the Dover's comment was just not strong enough to overtake the dollar strength, okay? So keep that in mind, and we will see it on Tuesday. Don't do anything on Monday. But if you see the drop of 104.896, this structure right here, then that means right there to me, there's a key indication we're dropping right here. We're dropping. We're going to come down to this imbalance. It's an imbalance sitting right there in front of our face. This is parity right here, about $1, but there is a small imbalance here. I hate to say we can come down to that particular order block. See, you see this order block? That's a very strong order block with imbalance sitting right there. That'd be awkward to see your USD go so far as 105 to come drop all the way below parity. This is a low probability. This is high probability, but this is not impossible. There's a difference between probability and possibility. Okay, we'll put this right back here. And so with the upcoming strength, I'm more short on USD. I would be looking to short, especially if it's a break of 104. Let's short this bad boy, take it all the way down close to parity. And in either way, I wouldn't be looking to buy in Trump here, right? So that would be the same with pound. I'm short on pound USD. Euro USD and pound USD are very, very closely related and correlated at a very high degree, close to 90-something%. And right now, if you look at this pound. Let me zoom in. Let me move this out of the way for you. What I mean by it is this right here. Move this out of the way for you. And let's take a real good closer price. We have this high back in July 22nd, and then it hit it one more time before it broke away, right? So we had this P formation high, and it just, boom, took it down took it all the way down. We had this flash crash come down. And then since then, pound USD has been on a rebound like it ain't no tomorrow. We're talking about a nice 1900 pip move, pound USD, nice. But we get to this location, and you guys, as I zoom in here, these are daily candle. It comes up here to 1.23, which is pretty much close to that price over here, 1.22. Failed to break it. Come back up here the next day, failed to break it. Come up here one more time, pierced it. Probably trapped a lot of traders, got as high as 123.4, which broke the previous high, 123.1, and then it dropped. And then it dropped again, and probably started trapping a lot of traders who were shorting right here at this structure, 1.21. And then it gave 3 days of bullish movement and went right back to as high as 1.23 again. I'm like, holy smack. So 1, 2, 3, come on, 4 days. Right, and we're right about about 122. So that's pound USD. What's the next move or the highest target? Well, you got this order block up here, talking about another 297. I don't know if I will buy that. 297 is attractive. Oh my gosh, look. This thing has been on a bull run. This is pretty strong, but I would buy it here, maybe, but it's been kind of chopped up here. I'm concerned that I'm more bearish. So I would be shorting or looking to short pound USD along with the dollar and taking it down to all the way down to 116, right? So for me, yeah, that was medium probability. But this is high probability. That's high probability. And we're there. So I don't see, if the market makers comes up here at CPI and pokes it up, I wouldn't go for that fake. And that's why I don't buy the highs, because you're not chasing it. You're not trying to go, oh, it's going to keep going, it's going to keep going. Even if it goes to 297, guess what? My market is going to be, my move is going to be just like this. It's going to move down. I'll be shorting it from there, right? Either way, that's where it's in my premium still, right? And I probably wouldn't go for that anomaly. Let me go from this structure here to come down, right? This was like a flash crash down. That was unusual. Doesn't happen normally, maybe once every 2 years. So I'm going to go from this swing, right? From this swing low. And I got my 50% target around where this imbalance at. But this structure right here, which is around where 618 at, and what I'm talking about price is 116 as a potential buy target, and we'll come down it. We'll talk about that when it does make its move. I think it's more of a matter of when rather than if. So 115, 116, 1.16, 1.14 for a buy. But right now, I'm short. I would be shorting. I'd be looking to short pound USD. I'm looking for USD strength. And again, it's the same combination. It could come down, and then pound news could take it up, or pound news could push it even further, right? Because it's more dovish in what's going on in Europe. Europe is not in a great place still, right? We've still got the Ukraine war still going on. Winter's getting ready to, it's already upon us, and they're still in a crisis over there with the inflation and things going on over there. So I'm expecting this to kind of cool down this heat on the euro pound heat to come down, right? I don't think it's going to come up here, and we'll see how it reacts on Monday and Tuesday. Okay, odd USD. Odd's been, it's got a nice strength. I see odd maybe coming up just a little bit more, but again, this right here, this looks like we got a very strong resistance standing right in front of our face at 0.69. 0.69 is the resistance level of where I see, I don't think you're going to go any much more higher than odd USD. For you to go 250 pip more to the next order block and structure, you're going to have to be able to override the upcoming dollar strength, in my opinion. And I don't see that happening this week. Okay. With the market already being exhausted, you know, I already pushed USD and took advantage of USD strength. My structure stands. I'm more bearish on USD, so I would be wanting to short, especially when you're in this premium area. It needs to come down at least to my imbalance area, 50%, which is at 0.65 to 0.636. And once you come down there, I'll be looking to buy, but not right now. Even if you do go up 250 pips, which I doubt, right? You have to have some very big pound strength to odd strength to push over the FOMC, upcoming FOMC news. To me, no, folks. I'm looking to short. I would be shorting USD to look for a comeback, and if not, wait for it to come down here before I buy. Okay, same thing with NCD USD. Look at that move. NCD USD, look at that swing. Do you see what I'm talking about from all the technical analysis that's telling me that, look, Leonard, what do you think is going to happen with the expected CPI and FOMC news? Do you think the dollar is going to be weak or strong? Well, in this particular case, if the dollar is weak, that means we're going to see a continuation of this particular move, especially with NCD USD to go up another anywhere between 300 to 534 pips. It's already moved. It's already taken advantage of the dollar weakness of 940 pips. I don't see it coming. And if you guys see it coming, I could be completely wrong. I'm not right. I'm not 100% by far. But if you guys see this, it's different. I can't buy this. Even if it does move, I would want to buy it down here. So that's why I am more on the ear of caution to say, hey, this is going to short. I'd rather short NCD USD. It came up here, and I called this last week, and I said, listen, this is more short. And it did go down, and it came right back up. So it went from 6.6418, and it came down to about 0.632, and then it came right back up to 0.638 again, right? 0.64, and then it came just short of 38. A hard time breaking resistance level. Well, obviously, this market structure is a very key reason why, because that's an order block sitting right there, and we just covered all of this imbalances. But in the mixture of all that, we created some imbalances, right? So we got this imbalance, we got this imbalance, we got this imbalance. So we got three good, strong fair value gaps there. But at the same time, we got some nice order block level cluster right there, and we got one down here. So I'm here on the caution to let's short this bad boy. And just like I would do odd, and there's two areas that I would see a potential target to come down to. One of them would be 0.6104, and the next one would be 0.597, right? I have to come down here. This would be nice because this would also be around the 50% level, right at 0.59, and it could even dip even lower to around 0.58, even too low as 0.57, but let's wait till it gets here first before we make that decision of where we want to buy. But for now, I'm more here on a caution of short. So I think you guys would agree with me. And if not, I can be totally wrong. This thing goes through the roof, and this technical analysis didn't even apply, right? We're at 100% retracement on the NCD USD right here. If you would have thought a fib there and said, hey, where is the pullback retracement? Well, 50% is right there. 618, 786. We're basically at 886, basically 100% retracement on NCD USD from the drop. I'd actually see a pullback now. And then let's go back up. Okay, that's NCD USD. Let's go a couple more USD pairs. So we got USD CAD. CAD is going to give it a little bit of more strength. I would like to see, it's been ranging, right? So USD CAD has been battling it out. It's been a ranging week, right? And believe it or not, I do expect to see some more strength coming in now. And I like to see a drop on USD CAD coming for the next 1 day, 2 days. I can see it come here. I can see it come there. And then basically back down to this order block, right? So CAD's going to just like, boom, just pound it. I can see pound coming in, CAD strength coming in. CAD strength coming in, pushing this down to about this order block. And then boom, we push right back up either to this order block again or to this level. And then we come back down. That's like one big range. Yeah, I hate to say that, but I'm seeing CAD strength coming in. I don't think USD going to be strength on Monday, Tuesday right away, right? On Wednesday, well, Tuesday might, but Monday and Tuesday could be enough, or even Monday could be enough to push this down. And then we have a Monday trap day, thinking traders going to go short in USD CAD, and all of a sudden Tuesday CPI and FOMC takes it right back up. That happens. And then Wednesday, boom, come back down. Or it just could be a Wednesday, Thursday, right? But I don't think it's going to go higher than this, and I don't think it's going to go lower than this particular order block level. Okay, so I would be more on the short side of USD CAD to about 1.33 and nothing lower than 1.338. So 1.33, I'm sorry, 1.34 even to 1.338. I don't see any lower than that. I can see USD CAD kind of battling out still, or it can be still in the range for a little bit. So we'll see on Monday and then Tuesday. Okay, that's USD CAD. USD Chef. Now, USD Chef is a little bit different. So USD has been beaten up by Swiss francs, right? So Swiss francs pushed it all the way down. What? Well, I don't see Swiss francs kicking in with strength yet until Thursday, and that might cause this pair to range. So I'm expecting still, look at, so this was all week last week. 1, 2, 3, 4, 5. What did it do? It went up to about about 96, and then it came right back down, right? 0.96, 0.94, sorry, 0.946, and it came right back down to 0.934. So I'm just going to move this over, and I expect the same, right? I expect this to come back up. We still got this imbalance, so I'm expecting this dollar move, push this Swiss francs right back up here to this level, which is around the expected level of 0.979. I like to see it come up to this level. I don't think it's going to break this, not this week. And it's already been exhausted. Look at this market. This market is already down, right? So it's already been down. It's having a hard time breaking this level. I don't see it, come all the way down here. Come on, not yet. I can see it coming up. And if I put this range back up here, it's in my discount. I can't sell it. It's telling me to look for buys, even though the market's kind of looking kind of bleak, right? This pair has been looking kind of bearish. I get it. It's completely in a downtrend, but I think that's enough. And I think dollar's going to go ahead and push this back up for the week. And then come Thursday, Friday, I think it could start to fade. We'll see. But for me, I'm long USD CAD. USD JPY. Same thing. It's having a hard time breaking this low of 133.6. Market is exhausted on USD JPY. I think the JPY has been taking a nice, advantage of the dollar with the strength, for the last week or two, and that's great. However, left some imbalances, and we're pretty much at the swing of this market now. With the upcoming FOMC, dollar strength, let's come back. Let's pull back. So I see it pull back to at least 141, and it could go as high as 145. So I'm more bullish on USD JPY than anything. I can't short it anyway, not when it's sitting right here in front of my face on a, let me put this here. That's on a big move here. Move this over. If I was to put the fib here coming down, right? So this is more in the buy-in area right here. And then when it gets up here, then I'll be selling. And then we bring this bad boy back over here, right? So to me, this is in the buy zone, and I would want to buy it. So that's my take on USD JPY. So I'm more long on USD JPY, especially when it looks like that. Oh, geez. So this is kind of the thing that we've been talking about with the US dollar, what we talked about from earlier. Okay, let's go right into the other JPY crosses, moving along. JPY, it's been right back to the high. It's been a nice little range. I do expect this to come up a little bit higher. Okay, it bounced off of this, it came back down. You know what, with JPY possibly being a little bit weak, I could see this being this range. I wouldn't even put this on a hot list. This would be more of a watch list if you were to look at it that way. It could be in this range a little bit more. I got to see a break of 144.365 before I think it can go long. But if you look at this market on a higher time frame, this is about as high as it's going to get. Right, we're looking to take this thing back down. It's been just kind of a historical high of 2014. 2014, it had not reached that high, came close, but I think it's going to stay in this range a little bit. And these are these three range prices that I'm talking about, and I'll lay that out in a minute. So it came up to the top of this range. I could see it come back down, maybe about right here, and then come right back up. So that price range right now is at 144.36, and I can see it come down about 140.76, right? Now, if it breaks, it's not going to go any higher than maybe 145, no more than 145.6. I wouldn't take this long. If this thing goes long, let it go long, and I'll be looking to short it. To be honest with you, yes, I do expect JPY to be weak, but I also expect Euro to be weak as well this week. So this might be a range and pair. This would not be on a hot list for me. This would be more of a watch list. And that would be the same with pound JPY. I would put pound JPY more on a watch list, right? It's ranging between 1.68 and 1.65. And as low as 1.63, right? I'll take that back, even as low as 1.6. But lately, since October, it's been in this tight little range up here between 1.68 and 1.65. So I don't see anything else spectacular about this pair. EJ and GJ, they don't look very attractive at all. I would not be in excitement move if this thing pop up or this thing drop. I don't see anything happening at this point. To me, there's not a really big edge on EJ and GJ. Okay, CAD-J. Now CAD-J, I would definitely I see a potential hot trade here. Let me put this long lane to the side for now, and let's look at this pair a little bit closer. Right, this pair had a nice drop. And we're at this key order block of 99.48. Okay, nice. It came all the way down. It broke all the structure, gave a nice, but look what it did. Look at all this imbalances. Balance here, imbalance there, and there's another imbalance here. So we got 1, 2, 3, 4 imbalances that it left on the way down. Well, with the expected CAD strength, yep, there we go again, CAD, oil, CAD, yep, strength, yep, USD CAD, yep. I see this potentially still valid. And look what it did here. It basically came down 1, 2, 3, 4, 5, 6, and really didn't break this low of 99. It really didn't. So what I would do, what I'm going to do, especially when the market opens back up, yeah, I'm putting a buy. I'm going long. So I would long CAD JPY, and I see this as a potential target all the way up to about this particular level as a very, let me go ahead and put it's a high probability. Put this right there. So I see this as a high probability trade setup for CAD JPY. Going to be like USD JPY, CAD JPY. It's going to push this thing back up. We're going to see. I like to see this come up to about 105, and in this particular area of 105, I'll be looking to short it. And if it comes up to 107, I short that bad boy again. These would be my two short pending shorts right now. I sure would. But for now, I'm taking a small buy. And I like to take a small position. If you can, this is be a counter trend, because we know the higher bias is, the higher time bias is down, right? I would say it's short, but midterm, however you want to put it, you can put higher time bias is of course, you can put that as long, if you will. But you may want to make a note of it that says, hey, overall, this is a downtrend, but we're looking for a counter trend trade going long, right? For now, we're going to go long, and then we'll switch over to higher time frame bias to short. But right now, yes, the higher time frame bias to me, it's a long trade, and then a higher time frame like the monthly and weekly. I know that can be confusing, but this would be a counter trend to the higher time frame. But as a higher time frame on a daily, yeah, this is a long, and I like to see this go up, especially when the market's been like this and it's having a hard time breaking that low for 5-6 days for a whole week. Yeah, this for me, yeah, love that trade. RJPY has been kind of tricky, but I see RJPY still going up. Look at this. You see this move right here? I'm going to just shorten that up a little bit because it did make that move. If you took it along on RJPY, congratulations. You should be up maybe about already 164 pip. This is a counter trend trade. So I would say it's still long in my bias, going up to about 93. And it could go as high as 94, right? 93.9, 94.5. Once it gets into this area, then we're looking to short that bad boy, right? It's been in this range. Look how funky it is, but it's in the cluster because look where it's at. You see how all this reaction, we're in the same reaction. When you get this much reaction, it's telling you that price is struggling, because it's been on this bull run all year, and now it's looking to drop, right? But as of right now, I believe CAD, odds strength is going to push it up a little bit more, or JPY weakness. I think it's going to be more JPY weakness than anything. So I do expect this to be pushed up a little bit more. Other than that, it's not really a big hot trade. You can put this on your watch list as well, but this is a better trade than Euro JPY and Pound JPY, but it's a less quality trade than CAD JPY and USD JPY, in my opinion. But I do expect to see a little bit more pushed on our JPY before it drops down. Now, NCD JPY is in a horrible position because we're right back at the freaking highs again. Then go back to the weekly and go to the monthly. Get that. We're right back. We're right back at the previous all-time high since 2015. I don't think it's going to continue to go up, but this is one of those things that you would want to definitely put this on your watch list. I do not see the thing moving any much more higher. It could come up as high as 87, but I do expect some NCD weakness. So this might be in this range for a little bit. So I'm going to move this over just like that. Okay. So I'm expecting nothing on NCD JPY. I wouldn't even look at this as a potential trade. Watch list for sure. It's at the top. If anything, I would be looking to short it. And like I said, for this week, I would like to see NCDJPY kind of dance around here a little bit. But if anything, you could put a test trade on a short, because if anything between RJPY and NCDJPY, this is in a better position to be at a nice price to go short, right? So I'm short on NCDJPY bias. So if you put a short in there, that's great. And just watch it. I don't think it's going to move anything. But if you wanted to put a potential short, you can put a potential pendant short, a short stop or a sell stop right around 86, right? 86.4. Or you can put a short now. This is at a better price to put a short now and just let this thing do whatever. So this is, I don't think it's going to move anything, but if anything, I'm short on NCDJPY. Okay, let's go to CFTC. CFTC is going to pull back. Unfortunately, I do see it pull back. It did cover this imbalance. It created a few more imbalance that's on its way up right now. So I see CFTC going a little bit long to about 147. And unfortunately, it could go as high as 1489. Okay. To me, it's just, this is a watch list trade unless you're already in it. In other words, if you're already long, that's a different story. If you were in short, and we've been short biased, then this would be a definitely keep your reload at 147.37, or put your other reload at 149.04. I think we are definitely going to revisit this at a high probability of 147.3. We may even go as high as 148. So it'll just kind of scare everybody if once Swiss franc strength kick in this weekend, it could boom push all the way back up to 149, even go as crazy as 150. So just be aware of that. If you don't want to put your pending buy here, you can take this off and put a pending buy here because of the potential strength, or just waiting for to see what Swiss franc does. Other than that, it'd be a watch list, but it'd be a trade setup for sellers for us to sell. So in other words, I wouldn't get into a trade other than just reload for a short. Okay. Other than that, I am a little bit short-term, long-term, short-term biased to go long. If I was to short, it would have been here. I mean, if I was to buy it, it would be here. But I'm no longer be looking to buy like right now. Right now, it's looking to go a little bit higher. It could go here, low probability, 150, but definitely 149. I like that as a very good, strong sell point. Okay. However, I don't think it's going to go short here. It hit this low. It's going to go just like this with CAD, USD, JPY. I think it's going to come back up. Okay. So that's CFTC. Okay, you're odd. Whew. You're odd. Came down 4 days straight. Look at this. Look at this. This is my analysis. I'm moving this right over. This is a good trade setup, and it's still. If anybody got short on your odd, congratulations. You're up 233 pips. This was the sell point that I was talking about last week, and it did drop. And we got more to go. Okay, your odd, I think it's going to come down to about 1.50 to about 1.48. Yeah, 1.48, 1.50. So once it come down here, we'll be looking to buy. Well, right now, your odd is going to spank it. I think it's going to spank it down. Bring it down. Your odd was sitting up here. Look how long it's been sitting up here. Your odd since October 22nd. Came down, bouncing, 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 and came all the way up here on December 22nd last week, and then we saw 4 days of drop. It may pop a little bit, and then we're dropping. It's just going to be a nice fall. I think odd's going to kick it up, turn it up a notch, and maintain that strength on odd. Okay, pound odd. 3 days drop, 2 days of bearish movement, but that's a drop from this move. Yep, pound odd, same thing. Let's take this back down. I see this as all the way back down to about 1.74, 1.71, and even can go down as low as 1.68. Okay, let me make this Okay, so if I was to put some probability here, high probability target, high probability POI right there, and that is 1.74604 right there, 1.74604. I can see that. So basically I'm short, right? So you guys already got that. This is a medium probability. I can see this coming down to about 171, but the low probability, which is not a possibility, which is not to say it's not possible. This is be low, but my low probability target will be 1.685, right? So I'm looking for pound odd to push this down. This would definitely be a high probability target. It gets down to this level, which is where my 50% level is near, but you see this imbalance here, and you see this imbalance here. These two imbalances are very, very important. Okay, those are nice, very targets there. It's having a hard time breaking that. It came up here, look at it was over here, came back again, which is what I mean over here is March 22nd, March 15th this year. Then it came back up here on October 22nd. Not quite, but then it came back again on December 22nd. Hold on, October 22nd, December 22nd. 3 months later, that's weird. Okay, yeah, pound on, you're on. We're gonna take this down. You're a CAD. What do you guys think? Are we there yet? Let's drop this bad boy. CAD strength, come on through. I've been waiting on you. Come on, CAD. All right. Look at this. When you see something like this, this is lighting up some really good setup. When you see a lot of fair value gaps and imbalances, got 1, 2, 3, just pick one, right? 4, 5, just so many. I don't want to take that one, but get 1, 2, 3, 4. So this target, which is a very key order block level, which was a very low probability, but we got there. Right there. All right. So you're a CAD, I'm short. Target to at least this structure right here, 1.37. All right. So we're looking at a potential 692 pips. And get on down, baby. Come on, you're a CAD. And then let's take it back up. Let's look at a higher time frame real quick. You see how low that was, right? This was the top of the market, right? This is a weekly. Okay, it was way up here. It came way down here and told everyone we should be buying. This is on a monthly, and we're going up, and we went way up here, way to this, basically to this order block. Well, it's just not going to keep going up, right? We're not with CAD strength. It's luring in, and it's already at the top of this market, and this market has already moved up 1,529 pips without any major quality pullback. And if you can see, there's a lot of imbalances that left a lot of traders who didn't get a chance to get in. So there's 1, 2, 3, 4. Well, this is a big one, right? But this is on a weekly imbalance. You go down to the daily, it's kind of breaks down a little bit more imbalances. It's pretty clear that regardless, we got a lot of imbalance here that I can see it at least come back 50%. Okay. So the structure that I have here, make sure I mark this. So I have this as a potential target. It's going to be more of a zone. So let's say about 1.37 to about 1.365. Okay, I can see it come all the way down. Euro CAD, CAD strength, pound CAD. What do you think? Same difference. Look at this move. Okay, I think we're there. Look at this. Nice move, nice move, nice resistance there. I see pound CAD Again, I know I said pound CAD was weak, but market kept pushing, right? So we've been kind of scaling into this trade. If we got in a little bit earlier, we kind of just scale into this trade. Hopefully the first trade with more light as a test trade, as it went higher than I thought. And I thought it was going to come down here, but it went up another 944 pips, just like, oh. But the good thing is it left a lot of imbalances, right? So pound CAD, I'm short, obviously, and I'm looking for pound CAD to come down to about between 1.57 to about 1.56. So I like to see CAD, man, smack this thing down. Give me some relief here, okay? The pound CAD, I'm short. All right, your UNCD, look at this. See, this is what I'm expecting your odd and pound odd and your CAD and pound CAD to look. This is what I'm expecting, right? Your NCD had been really, really good with this strength. And I see this coming down a little bit more, and not because of NCD's strength, but it's going to be more about euro and pound weakness, right? So expect a little bit more drop. We could see potential drop on 1.63 to a 1.61, but to be honest with you, this is more of a watch list. We should have sold it up here. This is not the time to sell it. Now it's time to look for buys, okay? So this is more of a watch list. I wouldn't trade it. It's not in the hot list. I'm just telling you, my bias is short. This is more of a watch list. I would not trade this. Your odd, your CAD, pound CAD are more highly tradable setups than your NCD, okay? Pound NCD, same difference. This right here, look, it went down a little bit more. I do expect a little bit more drop, probably about 0.89, maybe 0.87, but not much more. It's already dropped from up here for 1,200 pips. I'm not expecting any much more other than just maybe a little bit more weakness in the pound and the euro, but not much more on euro NCD and pound NCD. I'm in my discount zone. I'm looking to buy this bad boy anytime now, right? But seeing that euro odd and euro CAD and pound CAD is still up there because of that strength. Well, and more about the CAD weakness and the odd NCD and NCD weakness. I mean, odd weakness. However, I think that's going to be reversed coming this week. It's funny how the market is so bullish on USD, pound USD, euro odd and euro CAD and pound CAD is so far been bullish. What is the bank rate for euro and pound this week really going to do? Push it even further? To me, that tells me the technicals just tell me that we should be looking to see some weakness coming into euro and pound. But I got euro and pound news getting ready to, okay, what is that saying that even though the euro and pound does raise their interest rate, we could see still some bearishness in there, technically? Wow, that's gonna be neat to see. And that's what I'm seeing. I don't see continuous strength and pushing up. I mean, and I could be completely wrong. Like I can be completely wrong. And we got to be able to trade that way. Other than that, stay out of the market, right? You got to be able. You're taking some probabilities and risks, and you're trading smart, and you're loading into your position instead of saying, "Hey, well, I don't know which way to go. Fundamentals are tripping me up, and I'm scared." It's like you can't get in the market and be scared. You have to be smart by trading smart, but you got to get into the market to play. You got to be a participant, but you can be smart about it by taking light trades and breaking up your positions, okay? And then playing the key levels and being patient, okay? All right, euro pound, more ranging, right? This week it's gonna be more ranging. I don't see anything else that's going to break this market and go any other crazy level, other than I might see a little bit more bearishness, but this is not a tradable pair at this point. I see a little bit, I would say I'm more short-sighted on euro pound, so I'm more short-sighted. However, this is not a tradable pair right now. It needs to come down a little bit more to this level. And I do expect to see a little bit more, maybe a little bit more bearishness on euro pound. But right now, this is on a watch list, euro pound. Okay, pound chef. Ooh, I see pound chef coming down. Okay, this is my point right here. I see this as a potential setup for a short. There's, to me, I would put this on a watch list, but there's more other better trade setups than this one. But if I was to put a bias on here, I'm more short. I like to see with the expected Swiss franc strength come in and pound weakness. This is already high, and it's having a hard time breaking this high of 1.15. So I see this as a short to come down about 1.11. And then if it does come down here, I'll be willing to buy. But if it stays in a range, then this would be a watch list for pound Swiss francs. Okay, CAD Swiss francs. Ooh-wee, look at this. Wow, CAD Swiss has been falling. So I have not been trading this. And look at these imbalances. Now that I'm taking a look at this, this is, I think I had called this as a potential, this is my last mark here. I thought this should be a potential long, and it, boy, was I wrong. This thing went down another 200 pips from where I called it a potential long. Obviously, I would have put a potential test trade there. Wow. Okay. Okay, so here's what I'm thinking. CAD Swiss francs. We got two currency. One, CAD strength is already been strong against, or it's been weak, right? It's been weak on all pairs. I think it's now for CAD to pick up some strength. Okay, so here's what I'm thinking. I'm bearish. I'm bullish. Sorry, long on CAD Swiss francs, and I'm looking for this to go up. But I think the CAD Swiss francs is going to push this back down to here, and I think it's going to be in this range for a little bit longer, and then it's going to go up. Okay, so I'm bullish. CAD Swiss francs, to be clear. If you go to the weekly, take a look at this weekly. How about the monthly? Look at that, the historical. 2020. Oh, this is a perfect. This is a hot trade. This is a hot trade. Yes, absolutely. I'm getting excited already. This is a hot trade. So guys, this is what I would be looking for. I'll be looking for CAD strength, but the break of structure that I would be looking for, it's just right here. I need to see this structure. Like right here. And I'll put it right there. This structure of 0.6948, 0.6948. Now, could this market push a little bit? Yes, but I am looking for CAD strength to come in and push this up, but don't trade it until you see, and that might be a first leg. So let me put this back. This might be a first leg, and then I can see CAD strength come down, give it, put it right back down. It may even break this a little bit, come down, or come down to an equal low. And then guess what? Next year, CAD Swiss francs, we might see that W. So you definitely want to put this on your list to watch this. You can put a short test trade now as a sell and be ready that it could go down a little bit. Now, what's a little bit, right? From here, maybe another 112. I doubt if it could, this right here is a nominee way over here. Maybe 112 pip. That's not bad. That's not a bad trade. This over here, it's an anomaly. Just to me, it's a nominal. That's with that great fall right there. That's an anomaly. That's all liquidity. Nothing strong about this level. Hasn't even come back and reached this level back in 2020. Okay, I don't see this as a target. However, anything possible. We're talking about another 111 pips. I tell you what, you put a nice test rate on here, 0.01. I think you risk $10 to let it come down and take a nicer trade down below. But other than that, what more do you want? How much more of an edge do you want on this? Look at this big imbalance here. Look at this big gap. You don't think it's going to come down here? Oh, this is a trade. This is it. This is an epitome of an edge. Okay. So I hope you guys like that one. I do like this one. To me, this is hot. This is hot off the press. Now I'm clearly looking at this one. Of course, if I would have put a test rate there, I would have definitely put another one there. This is it. So we're talking about target here. First one will be at 0.70. That's 196 pip. And then we're coming way back up here, 497 pips. CAD Swiss francs. Let's go. Awesome. Okay, odd CAD and NCD CAD is in the same position. It went slightly higher, and I think we're done. Right? I mean, what more? How much more can I go? Look at this. This thing's already been peaked. Okay, we're talking about what, another 247 pips on a 80 pip range pair? Nah, not even close. We're good. Right? Even if it did, you wouldn't buy. Right? It broke these key structures here. We're pretty much done. We're done. So watch for reaction here. So for me, if you're not already short on odd CAD, then I would definitely be ready to look for this particular pair to do something like this. It's going to come down, come back up, and then come down. Okay. Give you that nice MW pattern. Give you go into range, stop hunt, down. Okay. So for me, this pattern this markup has not really changed other than I'm moving it back more. Obviously, it went up a little bit more than I expected, but and come down about target between 0.891 and it could go as low as 0.88 or even 0.87. Okay, so I'm gonna put it like that. That's on odd CAD, and look at NCD CAD. Look at NCD CAD. Oh my God, this is even a nicer trade too. Odd CAD and NCD CAD. If you're not already short, I would be shorting it on just me. These are really good setups. This is 100% retracement from the swing low, from the swing high here, and it came all the way down and came all the way back up. Let me move this up more, and that moved our 50% target up to about this structure here. So I would be, I'm short bias on NCD CAD, and I'm looking for NCD CAD to come down to about 0.82, okay? And now, again, this is one of those things that we should start to see some hesitation, come down, give you a little bit of ranging, Asian range, Wednesday maybe, give you a little bit of retest, maybe come close, and then boom, it's coming down for the rest of the week. I think CAD strength, this is another one of those CAD strength situations. CAD strength coming down, oil, CAD pushing up. It's from a technical standpoint, everything pointing for CAD strength to kick in because of how bad it's been getting beat up. Odd CAD, NCD CAD, Euro CAD, Pound CAD. USD CAD's been kind of ranging. CAD JPY took advantage of that CAD swing when JPY pushed that all the way down, not because of the JPY strength, but more been about CAD's weakness. Come on, Canadian. Come on, I need this Canadian dollar to kick in, buddy. I'm rooting for you. All right. I want this loony to just really go off. All right, and the odd chef and NCD chef, I'm not going to get into those pairs. As you can see, it's not much to see. I'd be more, look at this. Come on. What more you want? Watch list, NCD chef. I'll be short bias NCD shaft. I can see it coming down, but maybe get into the range. Odd shaft is not going to get anything crazy. Odd NCD is a little bit different story. Look at this. You can see I've been marking this thing back up. Look at imbalance here. Got the structure here, got an imbalance here. Oh man, this is a nice setup, okay? Let me go to the weekly. Look how it was up here on September, and this thing dropped all the way back down. And it dropped a nice, I wish I would have got this trade up here. I wasn't following it. I wasn't following it. 881 pips. I should have been following out NCD. This is one of those times where it gets way up here. Obviously, you would probably start shorting it, and finally goes in your way and goes 881 pips. And you're like, oh, geez. But now, just drop. Look at this move. I want to kind of, and we'll probably analyze it a little bit closer during the live trade room. But look at this move from here, from this swing. Look at this angle versus this angle. There's a big difference between that, right? It's not what would be similar symmetrically to that angle would have been like this. And I hope you guys would agree. But that's not what happened. What we see is this. And that, my friend, is a 70-degree move. This is a 90-degree. So anytime you see something like this, what do you guys think? Hard to snap back. So you're going to see more of a snapback than you saw in this one, okay? Yeah, you're going to see more of a 50% snapback real quick versus this one, right? This one will just drop, but that has nothing to do with this, right? You don't see a snapback goes right back here. It comes way up here and now it's dropping back. This snapback is going to be nice, okay? So odd NCD is more long and bullish than I've ever seen, okay? Now, that doesn't mean it can't drop anymore, but let me go to the daily. One, two, three, four, five. So this whole week, this is what we've been seeing. It came all the way down, but right here, I got stars like this right here, which tell me there's a divergence that is crazy, crazy, crazy apparent, okay? And you saw Euro odd, you saw pound odd, you saw how odd JPY was already pushing up. Euro odd and pound odd been beating up on odd week for the last 2 weeks. But the last couple of days last week, Euro odd and pound odd been, you can see where the odd strength is starting to get in. So odd JPY has been pushing up a little bit for the last couple of days. So odd density, I think you are going to be a nice trade up. With odd CAD and NC CAD, I think that's going to be a push down, but it's going to be more about CAD strength than it is about odd weakness. For this particular case, between the odd and NCD, I think the Aussie is definitely going to kick all over the Kiwi. That's going to take it over. But anyway, if you think about it, this is the swing high. This is the swing right here, swing low, and it went all the way up here. Are we in the buy zone yet? Are we in the discount? You can see the difference between the 50%. The purple would be considered the premium. This is where you would want to look for sell, and this is in the buy. And we're past the 618. Look at, if you look at the fib, we're past the 50%, we're past the 618. We tap right into the 786. Oh, we only got 2 more levels, right? 886 and 100%. I don't think it's going to come back down. We're saying this thing could come down a little bit more to about another 285 pips. I don't think NCD has got that much more strength in it. I mean, if that was the case, I mean, NCD CAD's going to keep pushing, right? That means your NCD is going to keep dropping. The NCD is pretty much done, right? NCD shaft, right? NCD shaft, it's going to keep pushing up. I don't think so. Not this week. I think odd NCD, I'm long. Odd NCD, I'm long, and we are going to go up for quite some time. My first target, obviously, 50%, but I'm looking at the structure way over here. And I'm thinking this is a nice, beautiful target where I can see odd NCD picking up. So if you want to get into a trade, I'm long odd NCD, and I'm looking to go about 1.09. Okay, that'll be on odd NCD. You're a chef. I tell you what, no trade, watch list. Look at this. I think this is going to be pushing back down again. I think it's going to be in this tight low range. That's why I don't like US chef a lot. Every now and then you get a big move, and then next thing you know, you're in a range for a long time. In a range, you get this move, and then you're in this range for a long time, right? Every now and then. So that's why it's a very low volatility, 30, 40 pips move, right? That's what it does in a day. So I really like to go over this pair because this is not. I can put this on a watch list and just continue to put it on the watch list. And every now and then I'll take a look to see if I see an edge trade. But other than that, nah, I don't see anything with this. I see switch friends probably coming down. I'll be more short bias than anything. So I can see it coming back down to 0.97, and that's about it. And then probably come back up, right? So if anything, let me put this. I'll put this market there so when it comes. All right. So I'm more, I would be more short bias on your US Swiss francs. And what we're talking about, another 111 pips. But other than that, this thing's going to come back up after Swiss francs kick its butt a little bit and come down. It probably didn't come down as a little bit that level right there. And then, but other than that, it's not really a trade. Okay. Okay. I hope you guys got your notes all set up and got a lot out of this. There's some good trade setups. We got a lot going on, and I'll see you guys on Tuesday trade room. Let's get ready. And let's see, Tuesday. Yep, 7 o'clock. So let's get hot and ready. We're going to see on Tuesday, we got CPI for $1. Keep your eye on the chart tomorrow. Just look. We're looking for development. Your trade setup should happen after market openings if you're not there on the hot list that we just picked out. Other than that, we should start to see developments on other trade, NCD CAD, odd CAD, and look for development on those trades. CAD Chef, look for development on that trade. I don't expect to see a lot on USD CAD, and I don't expect to see a lot on NCD JPY or even if Chef JPY, maybe a little bit more, but other than that, I think the other trades are hot lists. You're odd, pound odd, you're a CAD, pound CAD, NCD CAD, odd CAD. But NCD CAD and odd CAD, expect to see a little bit more range out of that, but you still start to see a little bit more bearishness. You might get a first leg formation on NCD CAD and odd CAD, but other than that, I think it is definitely going to be a nice sell setup for NCD CAD and CAD. Odd CAD, we should be looking for some CAD strength this week as well. Okay. Other than that, we're going to get right into it on Tuesday and get ready for CPI news. And then on Wednesday, FOMC, we do 2 sessions in the morning, and we'll do the 2 o'clock, 1:45 p.m. on Wednesday. And then on Thursday, it's going to be hot and heavy. We're going to get in right in about 6:45, just before Pound release their news at 7 a.m. And then following that, we're going to have Euro kick in. But Euro and Pound, I'm thinking some weakness, even though there's going to be some strength coming in from a bank rate expectation, but I don't see that happening from what I see on the technical chart. But we'll see how the market develop on Monday, Tuesday, and Wednesday. Okay. Other than that, I'll see you guys on Tuesday, 7 a.m. Awesome. See you guys later. Bye-bye.